think it's really interesting seeing all the gold move, from the UK over to United States. It always is a worry what's coming down the line. What do they have planned? So that is a little bit of a concern, and probably won't see much happen with gold. I think we're starting to see gold break out and push up because people are nervous. They're like, okay, something's going on in the gold space. America's taking it all back. They want to have it in their physical hands. So that's probably why we're seeing one of the reasons gold is moving and starting to run to some new all-time highs. But we're in that market environment where gold should do really well and keep doing well for another month or two, even if the stock market struggles here. So I think it's interesting. I like the precious metal space, and I think it's going to go to about 3,050 is the next upside target now that it's broken out. So it's got some pretty good potential to continue to run.
Gold is currently at a crucial juncture in financial markets, reaching remarkable price levels that are capturing the attention of analysts. Market expert Chris Vermeulen is remarkably optimistic, forecasting a bullish trend for gold that could see it soar to $3,050 shortly, fueled by rising economic uncertainties and geopolitical tensions. Earlier this year, gold reached an impressive $2,820 per ounce, a rise supported by central banks' more flexible monetary policies and the ongoing global economic challenges. Notably, central banks in emerging markets are increasingly investing in gold as a protective measure against financial and geopolitical risks, bolstering the momentum of gold prices. Vermeulen has conducted a thorough technical analysis using Fibonacci patterns, predicting a potential blow-off move, followed by a healthy pullback to approximately $2,200. This scenario is reminiscent of the financial crisis of 2007 and 2008. He believes this temporary dip will test prior breakout levels and could pave the way for a significant rally, possibly pushing gold prices toward an exciting $5,000 in the coming years. Historically, gold has proven to be a strong performer during economic uncertainty. For instance, during the market crash in 2007, the demand for gold skyrocketed, doubling its value by 2011. Similarly, the COVID-19 pandemic led to a surge in gold prices as investors sought safe havens for their assets. Some analysts are optimistic, projecting that gold could reach $5,000 per ounce by 2030, mainly due to expectations of falling interest rates and potential inflationary pressures. While there is a sense of hopefulness, it's wise to remain aware of how central bank actions and possible adjustments to Federal Reserve policies will influence gold's trajectory. Before we delve further into this topic, we'd love for you to subscribe to our channel. Don't forget to hit the bell icon so you never miss an update, and feel free to share this video with friends, family, or anyone you think would find this helpful information.
I think it's really interesting seeing all the gold move, from the UK over to United States. It always is a worry what's coming down the line. What do they have planned? So that is a little bit of a concern, and probably won't see much happen with gold. I think we're starting to see gold break out and push up because people are nervous. They're like, okay, something's going on in the gold space. America's taking it all back. They want to have it in their physical hands. So that's probably why we're seeing one of the reasons gold is moving and starting to run to some new all-time highs. But we're in that market environment where gold should do really well and keep doing well for another month or two, even if the stock market struggles here. So I think it's interesting. I like the precious metal space, and I think it's going to go to about 3,050 is the next upside target now that it's broken out. So it's got some pretty good potential to continue to run. In terms of the tariffs, I don't know how that's going to affect things. I mean, I've heard a couple totally different stories. I heard that Canada really, there's a very interesting short that they're wanting the tariffs to come. And there's this huge scenario that somebody's planned out that it's going to work out well for Canada. It's going to create more liquidity. It's going to work that people in Canada have to get more debt. Yeah, if we take a look at gold's been obviously in this series of more or less rally, pause, rally, pause, rally, pause, and now it's breaking out to the upside. Overall, just based on the chart pattern, is pointing to, if I squish the chart down, it looks like gold should run to about 30.50. So percentage wise, it's actually a pretty nice run for gold from where it is right now. That's another 6% move to the upside. And I think this is telling us that there's a lot more fear going on in the markets. When we look at the monthly chart of gold, this is,
Are you doing,
this
are
is
you
what
doing
we,
that based on Fibonacci?
yeah. Based
Yeah,
on
okay.
Fibonacci, when we go back and take a look at the last time we saw gold run up and do this type of move, I believe this is going to be like a blow off move where gold surges up. There's all kinds of chaos, uncertainty. And I feel like the stock market and everything is about to come tumbling down. And then it's going to reverse and have a big pullback and another pause, or potentially a much deeper pullback to the 22,000 level. Because I believe we're going to go into a recession type of thing like we saw in 2007, 2008, as it pulled back. So really, when we look at gold, the long-term Fibonacci targets have been hit. When we look at where it was to the big rally in 2011 and the pullback, we came and we hit this level. We've had a pullback, and now it's running up to this next level up here. And so you got to be bullish. I like physical gold. I hold gold. I am waiting for a bigger reset to buy another batch of gold once it does have some type of big pause and pullback. So until then, we're just got to let it do its thing. People are piling in, and I believe we're very close to a top in gold. But the move is telling us there is global fear, and the money shifting to America, to me, is a huge red flag that something bad's about to happen. Somewhere around a 20, I mean, like a 25, 20, 30% pullback, 34%, which, believe it or not, is exactly what it pulled back in 2008. And if you take a look, or we zoom in, you come back to this breakout level where it had this bull flag pattern. That's also right where it pulled back to before, and that's this level across here. So this is like the worry phase, everybody piling in, and then there's a financial reset, unwinding event. It could test this level, and then from there is when I think we see gold like skyrocket up into probably like the 5,000 range. And
Chris Vermeulen offers insights into the current precious metals market, highlighting the complex relationship between gold, silver, and mining stocks. While gold reaches new all-time highs, investors continue to show a preference for mining stocks, believing they can generate higher returns. Historical data supports this approach, demonstrating that stocks typically outperform gold over extended periods of 30-plus years. However, gold proves particularly attractive during economic crises and periods of market uncertainty, establishing itself as a crucial safe haven asset. The silver market presents a more challenging landscape. Silver miners are currently experiencing significant challenges, with stock prices declining 26 to 35% as investors seek more lucrative sectors. The volatility of silver prices, influenced by both industrial and investment demand, creates unpredictable market conditions that complicate long-term planning for mining companies. Vermeulen emphasizes the speculative nature of silver investments. While demand can spike during uncertain economic periods, this often leads to price bubbles that ultimately burst, resulting in sharp value declines. Consequently, silver mining becomes a less appealing option for investors seeking stable returns. Despite these challenges, the precious metals market remains dynamic. Gold continues to demonstrate resilience, offering investors a potential hedge against economic uncertainties, while mining stocks provide an alternative avenue for potential financial gains. Let's get back to the interview.
yeah, I think the dollar's put in a major bottom back in 2005 to 2015. It's now in a series of like rally, pause, rally, pause. We are seeing a series of higher lows. We're seeing a series of higher highs. I do think we're going to see the dollar really, believe it or not, take off. I know Trump doesn't want a high dollar. He wants a falling dollar and lower interest rates. But I think there's only so much. The market, has a lot more control than the Fed. I think the Fed's starting to lose a little bit of control of the interest rates and what's going on. And I think we're going to see the dollar continue to move up as kind of uncertainty and chaos hits. We saw during the 2000 tech bubble, we saw the U.S. dollar, the U.S. dollar have this huge move up with fear and uncertainty. In 2008, when the stock market crashed, we saw the U.S. dollar rally 26%. I think we're going to see it go back up into the 20s, mid 20s or higher, which is about an 18% upside move from where it is right now. So I think there's a lot of upside, and that will also add a lot of pressure to commodities and gold once this takes off. But we have been seeing people moving into both. The dollar's been moving up, gold's been moving up. That to me is a huge red flag that people are like liquidating. They're worried about, equities and home pricing. And they're both, the dollar's going up and gold. That to me is like the ultimate kind of warning something bad is likely about to happen. Right now, Daryl, gold, it's hitting new all-time highs. And the crazy part is I've been like preaching on this, like, don't hold mining stocks. Like, they're not the play. Gold is the play, but nobody wants to play gold because it's slow and boring. They all want to get into miners to make more money. But that's not how things really work. You have to go where the money's going. And gold has been going sideways, and now we're making new all-time highs. If you take a look at silver miners, I mean, silver miners have been absolutely beaten. They're down. It fell 35%, still down 26%, all because people are trying to get more out of the markets. The key is to know where the money's going, get into that asset. If gold is too slow, it makes you, and you're really bored because a big day on gold is like 1%. Um, well, you can buy a 2x gold ETF. You can buy a 3x. Now it moves like a gold stock, but you have the accuracy and the control, and you're in the trend of something going up, right? You can even do put or call options. Or you could buy some shares and do cover calls on it because I believe it's still going to do well. So people just don't know. They naturally have to go to wherever the fastest, shiniest thing is. And it's such the wrong mindset. It's like, find the quality trade and then amplify the leverage to your quality, to the standard that meets. Sometimes you don't need to add leverage because it's a fast sector already, or something, or you can jack it up. So yeah, that's kind of my rant on that. Gold has a lot of volatility. This is why there aren't many safe havens when the markets fall apart. If you hold on to assets, they're probably going to go down. There's a time when you need to like move to a different asset. Could be a currency, could be bonds. I think bonds will be a good play, but you can't, unless you want to go through these roller coaster rides and wait literally like, 9 years to start hitting some new highs, and wait like, 13, 14 years to make real money again. If you bought at the peak, that's a lot of wasted time. People don't realize, like, there's all kinds of other trades you can do. So many people get stuck in one sector and all they do is watch, like precious metals and miners, and they don't go outside of the bubble. And once something's topped, you do have to go find something else until it's set up another pattern. And then you can get back into the precious metal space. 2019 was the turnaround where it put in a bottom, broke into a new super cycle, and now it's starting this whole phase. This whole move here, like if we were to squish this down, is let me just go back. We could see gold go up to like 4,000, 5,000. That'll be similar to the type of move that we saw back over here.
Gold continues to prove its value as a safe haven asset, particularly during times of economic uncertainty. Despite the preference many investors have for more volatile assets like mining stocks, the steady, long-term upward trend in gold shows its resilience and reliability. As global fears rise, gold tends to perform well, with its price often surging during crises. Though gold may seem slow and less exciting compared to other assets, its consistent performance in uncertain times makes it a crucial element of a diversified investment portfolio. What are your thoughts on the current gold market? Do you think it's the right time to invest? Let us know in the comments. If you found this video insightful, don't forget to like, comment, and subscribe for more updates. Stay tuned for more content, and we'll see you in the next video. Thanks for watching.